Hi, this is for ACC4620 Auditing Insurance 2, and I'm Dr. Gregory. This lecture is going to be a continuation of Chapter 8, but we're considering it Part 2, which is the basic steps in sampling account balances and assertions and non-statistical sampling application. So in our first part, we looked at what sampling was about and how we go about identifying our sample. So there are 7 basic steps for substantive test of details. So take a look at pages 362 to 366 for details. Step 1, what is the objective of the test and the considered misstatement? So you've already gone through and you've looked at your risk of material misstatements. So what is the objective, say, of looking at the accounts payable transactions? And what is going to be considered, in your opinion, as a misstatement in that account class? 2, where will the population come from? Perhaps it will be all of the invoices for accounts payable during the fiscal year of 2020 or 2021. Third, what is the appropriate sampling method? Which method are we going to use to sample? 4, what will the sample size be? 5, we select the items, perform those substantive tests, and then determine what the results are. And finally, in that last step, we want to document very well all 7 of these steps with a conclusion as to what we arrive at. So let's go through all of these statements in a little bit more detail. Well, we have to look again. What is the definition of a misstatement? So a misstatement is dollar amount, either intentional or unintentional, and it could be in individual or aggregate. But we have to look at a little bit deeper that there are different categories of misstatements. So a factual statement is, there's no doubt. It's a known misstatement. We looked at the data, we looked at the detail of the transactions, we looked at the invoices, we found a misstatement. Second, a projected misstatement. Now, once we have done all of our testing and we come up with whatever our misstatements are or our errors are, remember errors, they calculated the information wrong, they paid the wrong vendor. We have to come up with a monetary amount of the aggregate of all of those errors. Then we determine in the aggregate what is the percentage of the errors to the total amount of the sample size. So say our misstatements, our factual misstatements were 10% of the total sample size. Okay. You're now going to take a calculation and extrapolate that out to the entire population. So then you have to find out what the total population of accounts payable is, which is the account balance. And you extrapolate what 10% of that total population is. Now you're going to take a look at that value and compare it to what you consider to be your misstatement value. The maximum amount of misstatement that we can accept without either an audit adjustment or qualifying our audit opinion. That comes down to what tolerable misstatements are. Anything below that extrapolation is with the tolerable level that we're going to accept because we determined what our misstatement value is going to be, correct? Now, when we did our planning, we determined what our expected misstatement was going to be. Perhaps we said our expected misstatement would be 1.5%. Well, if we had 10% of misstatements compared to 1.5%, then we have to take a look at, was our expectation in line with the outcome. So we have the factual misstatement, the projected or the extrapolated misstatement. We have the tolerable misstatement, which means we can go up to that threshold of the misstatement value. And if our extrapolated misstatements exceed that, then we either need to have management make the necessary audit corrections to reduce that down. And if they refuse to do that, then we may be considering a less than unqualified opinion. What is the population? What are we testing? What is the sampling unit? Could it be the customer's balance? Could it be the unpaid invoices? Whatever that is, we have to determine and make sure that you calculate what these values are so you can compare it to your tolerable misstatements. Ensure that your population is complete. You may need to run reports or have your client run reports of the detailed transactions and see if what you have matches theirs. So if you're looking at the unpaid invoices and they present you a stack of unpaid invoices and you add them up, have them now run a report of the outstanding accounts payable in their computer system and compare those balances. Finally, double check and just scan through those transactions. Is there anything unusual standing out? Is there something that you may need to pull aside and look at special based on maybe the unusual nature of the transaction? For example, you may have a transaction of buying an item that may not fit in the normal course of doing business. So here you would be applying your professional judgment. What is our sampling method? We have those two methods: probability, which is random or based on a position you take. For example, payments to all vendors in excess of $10,000. Well, you may have a policy in the company that says anything over $10,000 must have 2 authorized signatures. So you might want to take a look at that. Have everything pulled for $10,001 and over. Have them run a report and have them give you the documents. You compare them. Or you can do a random number generator that I talked about earlier that's in Excel. And you can look at that in the FX formulas, type in RAND, and it will give you the instructions on what to put in for your beginning and your ending sequence. And then it will spit out your random number generator. You can also use that non-probability sampling, such as looking at certain names or locations to select your sample. Perhaps you are interested in finding out if there's the possibility that an employee is creating false accounts payable. Well, you might want to look at and compare employee addresses to addresses of your vendors or your suppliers. Steps 4, 5, and 6 are, what's the sample size? Okay, you've got to go to step 3 to determine that. Then perform your tests. Now, what if you find some unacceptable results? You find some errors. Again, that total estimate misstatement, which is our threshold, cannot exceed the tolerable level. So if it does exceed it, you extrapolate out to the population and say your expected misstatement was only $10,000 and your extrapolated population comes out to $15,000, well, then you've exceeded your tolerable level. There are some things we can do. We can have the client make the accounting entries, and you want to document this all. Again, document, document, document. And in writing to management, you explain what you did, what your results are, what your recommendation is, and make sure that they will then have a chance to accept that, make the change. Again, get a copy of that change that's been made and post it in the general ledger. Or if they refute it, they're going to have to explain why they're going to refute it. Now, you can look for some common problems while you're doing this, and this is part of your documentation letter to management. If they've exceeded it and you've asked them to make correcting entries, you may look to them to find out if there's some training, poor process and procedures. Perhaps it looks like there's a lot of merchandise that's being returned without proper credits being applied. Items like that you can use as suggestions for improvement. You could also, before you communicate with management, you might want to step back and say, if you did non-probability sampling, you might want to switch it to probability sampling, that random sampling, and perform the test again. That way, if it comes out again that it's exceeded the tolerable misstatement, then you definitely know you've tried both ways of performing the test and they came out with the same results. One of the things that I see most common in audits is when we find that they've exceeded their testing, what we might do is expand the sample size. So if we looked at 50 items, let's look at 60 items. Let's look at 10 more items and see if those 10 items again reflect those errors. So you want to do a little bit of confirmation and go out 1 or 2 or maybe 10 more tests and see if you're coming up with the same results. Finally, you can change your objective. I don't recommend doing that because then you may be catering to the desires of management. But it could be that you have the wrong objective and you really are ending up testing something else. Again, take the time to detail each step. I recommend to clients to use a recorder and record their processes on a recorder as they're doing them. One, you're not having to stop, document, do something, stop, document, do something, and get out of a good, get out of sync of what you're trying to do. So what you might do is document it on the recorder, perform the duty, document on the recorder, perform the duty, and then write up the documentation. But after you write it down, test it again to make sure that you've done all the steps. Make copies of the documents that you're finding as part of your working papers and have someone perform a review. In formalized audit teams, that would probably be that next audit staff person above you will probably want to review your audit work for completeness and concur with your conclusion. Now, looking at non-statistical sampling in the substantive test, we could look at selecting transactions over a threshold dollar amount. As I said, perhaps in accounts payable, you have to have 2 signatures to authorize a purchase over a certain dollar amount. You could pull all of those to see if that test, if that control is being conformed with. Make sure that the amount makes sense. Again, go back to the policies. That will help support your guidance. You can also look at prior work papers if you have performed this audit in the past, and or look at the AICPA risk alerts for that industry. That might give you some information. If they're finding a lot of errors over a certain threshold, you can use the risk alert to support. I'm going to look at that threshold as well. Another way of doing non-statistical sampling could be selecting customers and vendors within a specific location. Again, as I said before, this could be used to compare employee addresses to customers and vendors in the same zip codes. Another example could be selecting customers, vendors using the alphabet. Maybe every other alphabet number you're going to select 5 invoices from A, C, E, G, and so on in your vendor list. Now, here's a statistical sampling that the text identifies with. It's called money unit sampling, and you're looking for dollar misstatements, and you're testing for overstatements when few misstatements are expected. So if you have a high level of risk that your transactions are correct, then you would have a low number of documents you would have to pull. So if we're expecting few misstatements, maybe we've scrutinized that account before. Maybe they have done some additional training, and based on your inquiries, you feel confident that there may be few misstatements in that account transaction. You may do just, confirmations of balances, or large confirmations, or large transactions where the risk of misstatement may be higher than in lower transactions. Now, a strength to that is it's very easy to apply, and it selects the sample in proportion to the dollar amount. And it may be highly effective in identifying these overstatements. The weakness is it's not to test to the understatement of a population, only the overstatement to the population. And in the review of accounts receivable confirmations, they might not work if large credit balances are existing. So usually when we're going for a confirmation, it means somebody owes us money, not we owe somebody money for a large credit balance on an account. And in the example in the text of inventory, if you think that there's going to be an expectation of high misstatements, this is not the sampling method for you. So in summary, we looked at the 7 basic steps in sampling, and we looked at non-statistical sampling and statistical sampling for substantive tests. Again, please read the entire chapter for the detail. And if you have any questions, please reach out, and I'll see you in the classroom.